Hey guys, and welcome to another episode of Smart Trading Solutions. Starting in Forex market, in order to success, the three first crucial questions you need to ask are: which currency pairs are going to work best at your trading time? Which pairs are going to have more liquidity? And how do each pair move together? Well, in this episode, we will explain all the answers that lead to a successful trading career. So, if that interests you, please give this video a thumbs up and subscribe to our channel. Also, comment below and tell us your thoughts and questions. We will do our best to answer them all. There are three major sessions in the FX market. They are Asian, London, and New York. Let's talk about the Asian first. In this session, what moving or awake currencies you are going to find are Japanese yen, Australian dollar, New Zealand dollar, and gold. Understanding which pairs will have more liquidity and are easier to trade in a session is very important. So, if someone wants to trade pound dollar in the Asian session, would that make any sense? The answer is absolutely no, because the British pound and US dollar trades are extremely limited or no liquidity in Asian session. What we need to do is looking at the pairs that are being actively traded in these sessions. To answer the third question, let's see how currencies are correlated in this example. If you look at the dollar yen and euro yen in Asian session, you will notice that they all move in the same direction. The reason is that, in all of these pairs, only yen is the currency that is actively traded in the Asian session. In other words, their movement is influenced by yens only. For example, the AUD-JPY pair. Looking closer, you will notice that it may not move as the other three moves during the Asian session, and the reason is that both of them are being actively traded. So now you have a fight between two currencies. Here comes an important point. Again, when you are looking for the trades, choose a pair that is influenced only by one active currency in that session, like pound yen, euro yen, and dollar yen in Asian session. The next session that we have is the London session. This time, pound, euro, franc, and gold are actively traded with the same concept applies. Moreover, since they're strong and weak currencies, we can trade a pair whose both coins are active, as long as one is weak and another is strong like euro pound in this session. If both currencies are strong, there is a high chance that the market will consolidate and be hard to trade. The last major session that we have is going to be the New York. US dollar, Canadian dollar, pound, euro, franc, and gold are being actively traded within this session. By now, you should have known the answer to the questions we mentioned at the beginning of the video. You should choose the currency pair that one is active and one is inactive, or one is strong and another is weak during a session. They are easy to work with, especially for beginners, and can ensure high liquidity. The correlation of pairs within one session depends on the active coin in those pairs. So guys, that's it for this video. I hope this video has some value for you. If it has, please support us in making more videos like this. See you in the next episode.